I went really slow and tried to help people understand the strategy more and more. And I thought today what we would do is spend more time going over markets and opportunities. So, going to do that. If you have markets that you want me to take a look at, just type them in the chat. Otherwise, I've got a pretty big list here, and we'll spend a lot of our time on the FX markets. Okay, go. All right. And we don't have to. So, as you know, the strategy that we use here, supply and demand, right? Just following simple rules to quantify supply and demand in any and all markets, any and all time frames, and for any financial purpose. Okay, let's do that. RTY and CL, sure. We can start with RTY. And RTY is actually a good one to start with because when it comes to supply and demand, if you've been following along for the past few weeks, months, or even years, I think you get the basics. But RTY is a good example. If we look at the 4-hour chart, we see that price maybe isn't in the middle, but it's closer to the middle in our little supply demand situation here, right? Then it's closer to the middle than it is to demand or to supply. Right. Yeah, Pip, I think we'll take a little break from the white charts. What I'm always looking for, it doesn't really matter to me all that much, but I'm always trying to figure out how can I make this more clear for everyone? And I think this contrast helps. So we'll stick with this for a little bit, see how it goes. Anyway, here we have demand down at 1040 and supply up to 1300. But again, we're sitting at 1127 and a half right now. So what that suggests is there's probably not much to do at the moment. In other words, entries into this market close to current price are not high probability. What we're looking for are entries that give us a high probability of success, low risk, and high reward, right? Okay. And they're not going to be found in the middle. Now you can always go down to smaller time frames. For example, this morning in the Nasdaq, in the morning session, and then right after that, we found this little demand zone down here. It was a fresh level, and we had a nice little rally off of it. But even that, if I go back to RTY here, again, going back to the 4-hour, I would suggest that even day trading, when you're like right in the middle, be careful because it's not high odds, right? You're not going to find a lot of high odds, high probability entries. You can, but the high probability, low risk, high reward entries are closer to our larger time frame supply demand zone. So that's RTY. Okay, let's move over to oil. And look, if RTY, if we were closer to one of these levels, we'd go down to smaller time frames perhaps, but we'd find an entry point that made sense. But let's go to oil. And oil's going to be right here. There it is. So big picture oil, I'll show you we've got a level that we've been watching here. Now this is a big level, but there's also two little levels inside there. So see how we have that 20 and a half down to about 17? Okay, so it's about the $3.50 level, but you're looking at a monthly chart. Now, we went over some, I don't know if we did this in here last time, but in the morning sessions I do, we went over a bunch of oil stocks. ExxonMobil, Chevron, the Carlyle Group, companies like that. We went over a bunch, and two of those actually met entry for us near the turn at the low, but the others did not. But we want to watch oil down in here. Long term, very, this is not a bad area, right? Not a bad area at all. In fact, but if you want to kind of tighten this up a little bit, if that's too wide of an area, we would go down to, I believe I have some levels in here for you on the 4-hour chart. Just go back far enough for you. And let's do that. Here we go. We're getting quite a bit of data. That's why this is taking a little bit longer than it normally would. But as soon as that data comes up, we'll scroll back, and I think you'll see there are 2 demand zones down there. We're very close to the lower one. This is a 4-hour chart. So little demand zones found on the 4-hour chart. Both have nice gaps with them. There you go. So you see how those show up. So now let's scroll back. We've been giving these to the people in the morning session. We had a really nice move off the top one. And then, and now we're down into this lower one. Okay. So you can see this one right here. Overall, we've got this rally, price comes down, drop, base, rally with a gap down in here. That level's about 1990 down to about 1960. 1990 to about 1960. And all of that is inside of this. Okay. Is there anybody that trades stocks in our group? Anybody that trades stocks? May not be, but that's okay. Well, I've learned with FX Street not to assume that people are all just Forex traders. Okay. All right, well, let's keep going. We can incorporate stocks into this next time if we want. Any other markets you want to look at? Otherwise, I can just run through my list. And to do that, why don't we go right over to the dollar? Some of these levels that we're going to go over today are levels we went over the last time we were together. We're going to start with this 4-hour chart. Actually, let's start over here with the weekly. That's not the weekly. There we go. So you can see all that's happened in the past month is the dollar has stayed within our weekly supply and weekly area of demand, which, again, we've gone over this a number of times. And now, as you can see, at 99 and change, we're right back in the middle. Right? Having said that, do we just forget the dollar and not do anything while it's like right in the middle? No, we can't do that. I mean, the dollar's impacts so many markets that we trade. So we can go down to a smaller time frame right here. Evan, I'll explain that in just a minute. So here's some levels I believe we went over last time. I'm not positive. I believe we did, but this 98 and a quarter price barely came down here over the past many hours. This is a 4-hour chart. So actually over the past day or two, price came down into the zone and is now rallying. If we want to find some supply, well, it's, there's supply up here, but I think we have some closer supply, but we're going to have to go to a 60-minute chart to find that. So let's do that. Let's go to the 60-minute right here. Okay. So we have some 60-minute levels that come up not too far above current price. Okay, so let's start, and really if we combine, I don't know if we're going to combine both these two, but we're going to go with this one right here. There we go. We're actually going to take it from right up here because that's the origin of the drop. Okay, so just one of the many examples where we're going to combine time frames to find out where our supply and demand zones are for one market. There's the dollar. Demand on the right, supply on the left. Okay. Yeah, Evan's asking, good question in the chat, if you see that. Says, don't mind me asking, how is this different from support and resistance? It's extremely different. So if you give me a couple minutes here, I'll explain it. So when I started my career, I started on the trading floor of the Chicago Mercantile Exchange many years ago. And obviously, I realized pretty quickly that how prices move in markets is all about supply and demand at every price point, right? I think we probably all agree with that. It's all about supply and demand. There are many different triggers for that supply and demand, but it's all at the end of the day supply and demand. Okay. Um, so here's the interesting thing, Evan. I don't know, maybe a year later, something like that, maybe more, maybe less. Then I was by that point I was bringing price charts over to the trade desk. I started to chart out where the big orders were. In other words, I started on the institution side of the business, so I was dealing with big buy and sell orders from banks, financial institutions, money managers, you name it, and facilitating those orders into the market. So I wanted to start learning how to read price charts and how to get information on where to buy and sell on price charts. So I knew where to buy and sell, right? It's where the big orders were. But I didn't know what that looked like on a price chart. So what I would do is I would bring charts over to the trade desk and I'd put, once I knew where the orders were, I'd put lines on the charts right there. And sure enough, what you see every day is the picture looks exactly the same. It's just the levels and strategy that I'm showing you here. Now, what happened was after that, okay, someone one day, I'll never forget it, this guy named Mark started to tell me that he told me it was something about the S&P or the Nasdaq. I forget which market, but he said they're one of them. Whatever he was talking about, he says going to go likely to go up tomorrow. I'm like, oh, why do you think that? And he starts talking about MACD, the indicator, and then he mentions support and resistance and all this stuff. I'm like, what's that? So he says, technical analysis. I go, no, I don't know technical analysis. I know what we do here on the trading floor, but I don't know what you're talking about. So the next day he brings me a book, and it was a book that had all this stuff in it, right? All the technical analysis chart patterns, all the technical analysis indicators and oscillators, all that stuff. And I start flipping through this book, and I get the idea of what's going on. He's kind of commenting as we're flipping through it, and I'm kind of I don't. I wouldn't say I was laughing. I wasn't laughing, but I was kind of like, I'm like, Mark, who would do this? I'm like, this is the opposite of what we do here. He says, Sam, this is what almost everybody uses to make decisions. I'm like, oh. So that was a big light bulb moment for me because I realized most traders lose money. Most investors never come close to achieving, their financial goals. Yet banks and financial institutions do really well, right? So it's okay. What's one group doing that the other group isn't? You follow me? Now, specifically, when you look at all the stuff in these books, and let's talk about support resistance since you brought it up there. Okay. Yeah, we'll look at gold shortly. So since you brought up support resistance, let's talk about that. Well, once I read the definition of support and resistance, I didn't even need to look at a chart. I'm like, okay, this thing is extremely flawed. I'm like, how's anybody going to make money with this? Let me ask you some questions. So with support and resistance, let's do this together. To draw a support line, what do you need? Like, what do all the books and what does technical analysis tell you need? And this is still most of what people do today. What do you need to draw that support line? 3 touches. Okay, so you need like 3 pivot lows, right? And then, so now you have 3 pivot lows on a chart, and now the next time price comes back to that level, what are you supposed to do? You're supposed to buy. Okay, so right. So think of that logic. Now, if you understand the supply-demand concept here, can you start to understand how wrong that is? When we talk about supply and demand levels, what's the one word that I almost always say along with supply or demand? And it begins with an F. Fresh, right? Think about it. Now let's go back to support for a second. Yeah, that means price has not been back there, but think of that support level now. Okay? In the world of technical analysis, you need to wait for 2 or 3 pivot lows, and then you draw this line, and then you're supposed to buy. Someone answer this for me. Every time you come back, price comes down to create those pivot lows, right? What's happening to demand at those lows? Is it increasing or decreasing? It's decreasing. Exactly. Every time you come back there, more of those buy orders are being filled. Don't take my word for it. Just think the logic through. And then you're supposed to buy. So I started to realize real quickly. I told my friend Mark. I said this book is actually teaching you to ignore the high probability, low risk, high reward entry, and instead take the high risk, low reward, and very low probability entry. That would be like me telling you, okay, here's a demand zone, but let price come back to it 3 times and then buy. See the problem with that? Welcome to the world of technical analysis. And again, I'm not just sitting here, I didn't plan on talking about this. I'm just responding to a question. But because you have that question, Evan, I want to make sure, because look, even if it took 5 minutes to answer that, if that saves you, years of time and tens of thousands of dollars in losses, it's worth it, right? And again, with all this stuff, don't take my word or anybody's word for any of it. Think the simple logic through on your own, and the answers will be right there. Okay. In other words, this is not how this all works is not rocket science. And I don't mean to make this sound, I'm not trying to make this sound like this is easy. What I'm saying is how you make money buying and selling anything in life is exactly how you make money buying and selling in the financial markets. How and why prices move in a financial market like the dollar or the euro or oil or gold is exactly how and why prices move in cars, airline tickets, food at the grocery store, anything, right? Does that make sense? Okay. And then of course you have the chart patterns, right? Anybody have a favorite chart pattern? Anybody have a favorite chart pattern from the books? I mean, these are literally the most popular charting patterns in the world still today. Anybody think of one? The reason I'm asking is just throwing out there is because they all have the exact same flaw. As you're going over that, I'll pull up gold here. We'll get to gold next. Yeah, Head and Shoulders. That's the first one, Melanie. Head and Shoulders. So, right. So, and look, for those of you that don't know what Head and Shoulders is, don't worry about it. Don't waste your time learning it. But every popular chart pattern in the world of technical analysis has the same inherent flaw. So you have your head, you have your left shoulder, then you have your head, and then you have your right shoulder, right? Now, help me out here. So, what's next? Once you see that pattern, what are you supposed to do? What do you do? You draw a line, right? What's the line called, and where do you draw it? Once you see the picture on the chart, yeah, you draw the neckline, right below where? Below those lows, right? That make up the head and shoulders all the way down at the bottom. Yeah. Now, what are the rules for entry? For entering this position? Once price trades below that neckline, what are you supposed to do according to the rules? Price goes right below that neckline. What are you supposed to do? Yeah, that's where you're supposed to sell short. What's wrong with that? What's the big problem with that and every entry into every one of these conventional technical analysis chart patterns? You're waiting for a massive drop in price and then you're selling. Just like, what are the other ones? The cup and handle, the W bottom. Where do you buy in those patterns? You wait for a huge rally in price and then you buy. Okay. What people again, and it's the problem is that people just read these books and they read all this information on the internet. People actually pay to learn this stuff still, and they never ask the simple questions themselves. They never dive into the simple logic of how you buy and sell anything. Instead, they just blindly listen to what people say or what books say, right? Again, how you make money buying and selling anything in life, when you buy, someone obviously has to buy after you at a higher price for you to make money. In all these chart patterns, that's the problem. You're usually the last buyer or the last seller. Okay. How many times have you heard a new trader out there, someone taking this up, that's new, after they do this stuff, and then after a little while, what do you hear a lot of them say? How many times have you heard someone say this? Boy, if I only took the opposite side of my trades, I'd have so much money. Have you ever heard anybody say that? Right? Yeah, it happens all the time, right? Why do they say why is that? Why are they saying that? Why does price turn? If they buy, why does price like almost immediately fall? Or if they sell, why does price almost immediately go up? Because they've been trained to be the last buyer and the last seller. And you can thank conventional technical analysis for this. And again, the only reason I'm spend a few minutes on this is because someone asked the question, which means others probably have the same question. And don't believe everything you read just because it's in a book. Think the simple logic through for yourself, and you'll understand how this works. A lot of people well, never mind. We'll get into that another time. Does that make sense? All right, let's move on. Okay, so gold, big picture. Let's look at and look, if you have any questions on this, you can always send me an email. In fact, let me put this in the chat just so I don't forget. Well, I'll do that in a minute. It takes me too long to type that out. Okay. Here's gold, and we're looking at a weekly chart. Real quick, we're going to look at this just so you have some larger time frame context. I believe we have looked at this chart many times in these sessions, but price has been contained for the past couple months the past few months between our larger time frame supply zone and our larger time frame demand zone. So just so you know where prices are at bigger picture, we're now going to go to a smaller time frame and find some levels that we can possibly trade against. And here we go. Let's pull up this chart right here. Now, sitting below current price, we have a choice of two fresh demand zones. See how one is a circle and one is a square? In the sessions that I deliver in the mornings, the circle means it's an overnight or kind of low volume session, right? Not a great session time level. And that one comes in at 1576.50 down to 1567. So it's a little bit lower probability because was not created at an ideal time. However, there's two levels below. It just made them one. So these are two levels on top of each other, starting 1533 down to 1513. Okay, 1533 down to 1513. And all right. So those are two demand zones below current price. And these are far enough away from, what you want to make sure are these far enough away from this larger time frame, not that one, sorry, this larger time frame supply zone right up here that we just looked at, okay, the 1703. Whoops, just bring this over here. Okay, make sense? All right, there you go. Okay. Any other markets you really want me to look at? Again, if not, I can go through my list here. All right. The Dow. Okay, let's see here. I was just looking. I was trying to get a different chart up here. Hang on a second. Okay. Let's go to the Dow, and we'll go to the. Why don't we go to the minis? Right, the futures. I think that's probably what most people are trading. That's my guess. There it is. Sure. Okay. So, unfortunately, with this one, again, we'll find other stuff, but see how this is right in between our demand and supply zone? We're looking at a 4-hour chart here. So we just want to be careful with what we decide to do in here. In other words, people say, well, where do you think price is going to go, up or down? And here it could kind of very easily go either way because there's a lack of significant supply or demand to stop prices from moving in this area up or down. Does that make sense? So we've got our larger time frame quality demand zone down around 19,215 and then 24,175 on the upside. Having said that, we can go to smaller time frames and find some more stuff to do. Thought we had a little 5-minute level here, but let me look. Those are from the other day. Okay, that lower one already met entry, so we're going to have to look below that. And I don't think we're going to find much. Yeah, there's really not much below that at the moment. So that's kind of yeah. That's the challenge with the equity index markets, at least entering positions today. Look, if you're able to we had all these larger time frame levels at the low, the week before, but now prices have shot back up here, and now the distance between our zones is pretty wide in the equity index markets. So the very predictable moves have happened. Now we just have to wait for that to set up again in the equity index markets. You never have to wait long, but there's plenty of other levels out there with markets out there with opportunities too, right? Okay. All right, let's keep going. We looked at the dollar, so why don't we go to some other FX markets? We can start with the euro. And here we go. So with the euro, again, I'm going to start. Oh, we don't need to start bigger time frame. We looked at the dollar for that. So we do have a demand zone down here. Yeah, we're going to look at the yen in a few minutes, Peter. 109.60 down to 109.17. That's 109.60 down to 109.17. It's a little demand zone sitting below current price. And we've got some supply up here, 113.46. Not fresh, though, not a fresh level. So make sure you understand that. Okay. Probably wouldn't short again up here because it's not fresh. All of this is happening, and this is an area. This is a level that we had in here in our FX Street sessions. The euro. There's that demand zone down there, that quality one coming out of that drop base rally. See the 104.50. That one just hit the other day. Anybody take this trade, by the way? Anybody take this position in the euro? Sitting in a long position from our demand zone. We went over that one in some sessions. And if not, again, there's a new demand zone, 109.60. But just understand that this one is much higher up, so odds come down a little bit, but still a nice profit zone associated with that one. And that's the euro. There's a small time frame supply zone. It's so much higher though. I almost hesitate to go over it with you, but it's sitting up here at 111, 111, about 111.59, 111.60. So there it is, up to 111.70. I see some other questions in the chat. There's my email address. We're going to keep going here. We got more to go over, but there's my email, ccmseidentrader@gmail. If you have questions, you can always email me there. Happy to help out if I can, or try to help you out, point in direction. If you want to send a chart or something, you can always shoot it over there. And there's other webinars too on the FX Street website. But if you have a question, here's my email address above. We're not done yet. Just wanted to share that with you because I saw some questions up there. Plenty more markets to go over. Let's take a look at the yen. Let's look at the yen. Okay. Here we go. So when we look at the 4-hour chart of the yen, um, price keeps getting close to our demand zone of 92.61, down to 92 even, but it just it can't get there. So what does that suggest about our supply, about our demand zone here? Small imbalance or big imbalance? What does that suggest here? The fact that price took off from our level, kind of keeps trying to come back but can't, right? Suggests there's likely to be a big imbalance here. Then we have another little level sitting below it. Above that, I know the profit zone doesn't look like much here, and it doesn't. But we do have a supply zone up here sitting at 94.12. Price has been there already, and it's barely touched that level, so that suggests we might have a decent amount of supply up there also. So this is one of those cases where even though the supply and demand is fairly clear, it doesn't mean there's necessarily a trading opportunity there. Okay? And that's because the profit zone, which leads to the risk reward, is just not ideal. So this may be one of those cases where, where do you think price is going to go? Your prediction is going to be correct, but if it's only offering you maybe 2-to-1, probably a trade you might want to be right on, but skip or pass. No issues there. Again, another what looks to be nice demand zone sitting down around 89.84, and then there's our upper supply zone 97.56. So 2 supply zones above current price, 2 demand zones below current price. These are all on a fairly large time frame, and these are likely to be the next turning points in the Japanese yen. Okay. Okay. Let's keep going. We had a nice the Canadian dollar met entry for us in some levels that we were looking at, specifically on this 4-hour chart. So let me bring this up. Again, this is a level that we went over not all that long ago. Anybody short the Canadian dollar from this supply zone of 71.36? I'm bringing this up for 2 reasons. One, we would not want to short this level again, because if you notice, look at how deep prices went into the area. So we'll look at a higher supply zone next, or a different supply zone next. But also I want to share the demand zone below if you are short the Canadian dollar. So you're likely to see demand come into this market 69.78. That's the fresh demand zone sitting below current price. Let's go to a smaller time frame here, and I believe there's I thought there was another level up here. Let me see. Oh, maybe I'm wrong. Oh yeah, there was a level developing earlier this morning. There it is. So I was looking for one further back, but actually there's a nice little area. Let's see if let me just put these lines around this and let's see if this qualifies. I was watching the Canadian dollar, well, almost 5 hours ago now, and right around 71.05 up to 71, maybe 15, 16. A new supply zone developed right up there. So there looks like there's room in the Canadian, to fall a decent amount more, maybe down to this 69.80-ish area. So obviously you have to make sure that you're okay with the risk if you're going to think of shorting a level like this. But there you go. That's potentially a new level. Yeah, we can look at the dollar Swiss, and we can look at it in the spot market. No worries. Okay, here we go. So again, we're going to quickly start with the larger time frame always, just to see where we're at in the bigger picture, kind of in the middle, like some of the other markets, and then we could go down to smaller time frames, because the Swiss, yeah. So the Swiss just turned at this level, and it's a level that price barely touched, if it touched it at all. No, it didn't. Okay, so this is good. So we're looking at a larger intraday time frame. We have a demand zone below 94.86 down to 94.40, call it 44. So some demand sitting below, and that's not that far from current price. Now for supply above, we may have something up in here. Let's go to a different time frame to look for that. So below current price, the nearest fresh area of demand looks to be sitting right here. But let's go to a different time frame to see if we can find some quality supply. Whoops, that's the same one. Okay. So looking above current price, we start to have all this stuff right up here. So really starting around 97.35, you almost have 3 levels on top of each other. So you can decide what you want to do with that, but typically, given what's to the left of this price action, the lower one seems okay, seems fine. Again, just make sure that you're okay with the risk. Are you talking about the Ahmed? Are you talking about the demand zone or the supply zones we're going over right now? Okay, sorry about that. Oh, the demand zone. There we go. Let's go back here. No, this is fresh, right? Price never came back to it. And what we do have, though, is some secondary evidence, meaning when price did come down here, it couldn't even get close to touching this. That suggests there's a bigger, a decent amount of demand in there. Okay, let's keep going. Oh, I'm sorry. I want to go to the Aussie dollar. Sorry about that. These two are always on top of each other. For the Aussie dollar, we're going to look at 2 time frames, actually maybe 3. Start right here with the larger time frame just to get some context. Again, we're really far from this level down here I'm going to show you, but you could see, our monthly demand zone. We just, that's the low so far. We had a huge rally off that. But again, that's not close to current price anymore. So let's come down to the 4 hour. Oh, hang on. There was some demand on the 15-minute chart. That's what I wanted to share with you. Okay. So if the Aussie dollar does move lower, I wanted to point out some levels right below 59.85. And in fact, maybe what I'll just do is put a circle around these so we can see all of them. We don't need to spend too much time on this. Okay? So right in here, you have like 2 or 3 demand zones sitting on top of each other. Now, I know this looks far from current price, but we're also looking at a 15-minute chart. Okay? So there's, anyway, there you go. Okay. Let's keep going. So we've gone over the Aussie, the Euro, the Yen, Canadian, the Swiss, the dollar. Why don't we take a look at bonds real quick, just because they're such an important market when it comes to, well, really everything we do. No surprise they're moving higher. It was their third or fourth time up to an area of supply. And let's go to the 4-hour chart here. There is a supply zone higher, but we don't really hit it until you get to about 184.21. I know that says 184.20, but this needs to be higher. There you go. That's about 31. So it's really just a touch below that. I keep making it higher. I'm trying to make it lower. There you go, somewhere up in here. So we're far from that right now. That's 180. That's almost 185. We're only 182 and a half. But just wanted to give you bigger picture context. We've been going over this demand zone a lot in these sessions. I don't know if anybody took the bond trade, but it's doing exactly what it should do. Going up to supply. And then there is a closer demand zone sitting below all this. This is an overnight or odd, off-hour demand zone sitting at 179.20. Then down at 172, which is much lower, another demand zone down there. So the only difference between these two is this one's a quality fresh level. This one's a overnight lower probability area. The other negative to this 179.20 is if you look at all this price action to the left, you typically don't want to see that much trading activity. Why? Because typically the more trading activity you have at a price point, the less out of balance supply and demand is. Right? And the other side of that is the less trading activity you have at a price level, the more out of balance supply and demand is. Right? Okay. So and there you go. All right, so we did cover quite a few markets, I thought, today. Hopefully that made sense. And if you have any questions, I put my email address a little bit higher in the chat, samseidentrader@gmail.com. And always good to be with you. Yeah, if you have any questions, I'll try to help. Just, yeah, we went over a lot of stocks in our morning sessions. I can definitely bring stocks into this the next session. You can always send me an email if you want, Melanie. I'll try to get some in there also. But yeah, great to be with you again. Have a great day, everyone, and we'll see you next time.